What do you read into the PCE data? What does it really mean for the Fed?
Morning, Guy. I don't think it means too much for the Fed. I think, as you said, it's all marginal. You look, I mean, the 2.8% print was softer than what the markets were expecting, but it's not going to move the needle very much for the Fed. Why do I say that? The Fed has penciled in a core PCE of 2.5% for 2025. So, and in the past 2-3 months, core PCE has ticked higher successively from 2.6, 2.7, 2.8. So this is not making a case, an argument for the Fed to be cutting rates. If you take the core PCE at 2.8% and a neutral rate of 125 to 150, the Fed itself has penciled in a neutral rate of 1%, mind you. So I'm thinking it's slightly higher than that, say 125, 150. And if you tack that on to the core PCE, what you get is a rate of about 430. 430, 440, thereabouts, and that's where the Fed is right now. So there really isn't a case for the Fed to be cutting rates at this point unless core PCE falls persuasively, and that persuasive is missing from that argument yet. Guy?
Ven, when we look at next year, I mean, we're kind of working through some of the key themes that could kind of work through the markets in 2025. Is central bank divergence going to be the story of 2025? As we look at over 100 basis points being priced in terms of cuts for the ECB versus, 30 for the Fed, and you have pointed to the caution around that projection as well. Is that the story, or are markets mispricing the ECB?
I think that the markets are completely mispricing the ECB, Tom, because let's rewind the tape back. At the end of 2023, this time last year, the markets were thinking 7 rate cuts from the ECB this year. What did we get? We got 4. Next year, they're thinking probably 5 to 6, but I'm thinking maybe 2 to 3, and that's it. Look, I mean, the Irish Central Bank speaker, Makhlouf, the central bank governor Makhlouf, has just remarked to the FT that people shouldn't start factoring in rate cuts below the neutral rate. And everyone's idea of the neutral rate, if you ask any ECB officials, it will range from 2 to 250. So the idea that the ECB is going to go below 2%, a lot lower than 2%, is just not well founded. Okay, there are a lot of risk factors looming on the ECB horizon, but the ECB is not going to cut rates below neutral.
If you believe Makhlouf, and you believe that actually that is ultimately where the ECB is going to stop, doesn't that imply that actually maybe the dollar's getting a little toppy here?
Well, I do think that the dollar is going to be a bit Guy, because, you know, there's this divergence in the US exceptionalism, right? The Fed, as we just made the case, is not going to be persuaded easily to cut rates. The ECB is going to cut rates twice, probably thrice, and therefore I think that the ECB will be, the euro will be offered, and therefore the dollar will be kind of bid for the foreseeable future. And mind you, the yen is also on the back foot.